As she said, my name is Divine. We are probably going to have the most interesting conversation. But let me see who is in the room. In the last 2 days, how many of you guys have heard the words embedded finance? If you're honest, how many of you? I see a few hands. Like someone came in and said, by the way, and somewhere in there, embedded finance came in. Let me see the hands. Cool. How many of you guys are offering, or you consider yourself a business or an organization that offers embedded finance solutions? All right, I think we have some work cut out for us, guys. Yeah? So we are going to have a conversation around, when we talk about embedded finance, first, what it is. What is it? I think it's one of the most confusing terms when it comes to, first of all, just understanding what it is, understanding how it comes to life. So I'm going to ask my panelists, you introduce yourself, you tell us what you do, but tell us a little bit about how embedded finance comes to life in your context. Starting with Meagan.
Great. Thank you very much. Great to see familiar faces and love being in Kenya. So I am Meagan Rabe. I look after fintechs for Sub-Saharan Africa, and quickly, just a summary on that, what it really does is we look to partner with fintech, support you and grow you in this ecosystem. Now, embedded finance is actually, I think, the reason why there weren't lots of hands is it's embedded. It's everywhere. At Visa, we believe that by 2030, 75% of consumer payments are going to be embedded finance. And the reason for that is you're actually moving payments closer to where the consumer is. So simple examples is tapping your phone and making a payment. When you're ordering online your goods, they get delivered, the payment just takes place. So a lot of it is invisible. When we talk to audiences like we are today, it's around how do you reach the consumer where they're at? Instead of, if they're on a specific platform or app, how do you reach them there, as opposed to making them move to another digital platform. So I'm going to speak some more about some examples a bit later.
Gwera?
Hi, so I'm Gwera. I'm the head of crypto at Onafriq. Some of you might know us by our previous name, MFS Africa, recently rebranded to Onafriq. And I really work with mostly the crypto space and in the embedded side of crypto, so under the hood. But yeah, what does embedded finance mean to me? So a couple things. Throughout my career, I've been mostly in the fintech space. And yes, at Onafriq, a lot of the work we do with crypto is quite embedded. But in my previous life, in consulting and banking in the past as well, embedded finance to me basically means, like Meagan said, meeting the customer, the user, the business that you're trying to serve where they're at. So we didn't see a big show of hands for people who understand embedded finance, but has anyone ever used a buy now, pay later app or feature before? Has anyone ever loaded money into a Chipper Cash account or yellow card? Some people. You're using embedded finance. That's it, the financial services is embedded into the experience that you're using. So that's what embedded finance means to me.
Awesome. Hi, everyone. My name is Thea. I lead marketing and growth at Stitch. Stitch is a payments infrastructure business headquartered in South Africa. So similar to what Gwera and Meagan were discussing, for us, the embedded piece of our payments is really about creating the best possible user experience. So there's a concept around sort of invisible payments. How do we make that experience as seamless and as friction-free as possible for the end user so that we can increase the percentage of transactions that are successful, so that we can increase conversion rate, increase revenue, and for us also enabling that consumer to make a decision about the payment method that is best suited to their needs and where they're at that time. So we do a lot of work to optimize that experience. Our payments flow can be embedded into any area of our client's app or their site. So they shouldn't feel like there's a barrier to actually making that deposit or making that payment, and it shouldn't disrupt from the space that they're in and the action that they're trying to complete.
Hi, good morning. My name is Ted Pantone. I'm the CEO and co-founder of Turaco, and we are an insurance technology company doing embedded finance. That's all that we do. So we sell insurance through partnerships with other businesses to the customers of those businesses. So embedding the transaction with something that somebody is already buying, whether that's a loan from a bank or a mobile phone from a financing company or deducting from somebody's mobile money account. So that's what we do. We have very practical examples of embedded finance everywhere in our organization, and we believe that it's the only way to make insurance work for kind of mass market consumers on the continent, and that's what we're building.
Okay. So as we look at embedded finance on a large scale, so let's talk about globally, and then bring it back home. What do you see as the benefits and challenges in your various work? But then maybe give us, in your opinion, the best example of embedded finance that we see today. We can start with Meagan.
Okay, great. So I think one of the shifts that we've seen over the last couple of years is embedded finance is a lot easier than it used to be in the past. And that's primarily due to the big tech players. So for example, you've got Apple, you've got Spotify, as well as Stripe as an example. So making uses of those open APIs have really made embedded finance a lot more accessible in the last couple of years. From a global scale perspective, if you look at Spotify specifically, as we all know, they were online shopping, really targeting a small e-commerce supplier. But what they did is they embedded loans, insurance, other financial products within their marketplace. And within the first couple of weeks, they had over $1 billion US dollars deposits coming through, as well as loans being distributed. Similarly, at a global scale, if you look at Apple, when Apple launched their respective wallets, within the first week, $1 billion US dollars was deposited. So I am very passionate about Africa. I'm African for Africa, and at Visa, we hire Africans on the continent, because I always say it's wonderful to talk about what happens in the rest of the world, but we live in a very different place. So let me talk to you about something that I love and see within our own context. So what we do is we partner with fintechs, and we try and say, how do we take these embedded finance and make it seamless? One example is a fintech in Nigeria called Thrive Agric. And what Thrive Agric actually does is they have solved or are solving food supply crisis across the continent. That's their mission. So what they wanted to do was distribute quality seeds and grow and support farmers throughout the development life cycle. But how they did that was they developed a credit scoring engine that would look at a farmer, geolocate their piece of land, and then supply the right seeds to the right farmer at the right time of year. And to the farmer, they don't think that they're getting a loan for seeds. They see that they're getting seeds, there's signing a contract, they're going to then distribute it. So that's what the farmer's seeing. But behind that, you've got insurance, you've got lending, you've got payments, you've got a whole ecosystem. And this is taking the global scale and making it specific for Africa.
Yeah, so I think I will look to the West, unfortunately, for my example of a really good use of embedded finance. So in the West, we've got neobanks. These are challenger banks that are challenging the traditional banks, who are using embedded finance in really interesting ways. So one, I would say, so there's one in the UK called Monzo. Monzo is able to allow people to build their credit score using their rent payments. So usually you can only build credit using a credit card, but they actually have been able to partner with credit agencies to see that you pay a rent on time on the same day every month, and that builds a profile for yourself. That's a really great way to build a credit score. The other thing that I used to the model that I used to think about, like good embedded finance, especially when it comes to like personal financial services. Who here knows Rihanna? We all know Rihanna. Rihanna has a banker in Switzerland who does a kick-ass job at her finances. Rihanna wakes up every day at the end of the month. She doesn't know how much money she's earning. She just knows, I have enough that goes into my savings account. I know enough that goes, to my kids, like, my child's pension fund or whatever, or my own pension fund. I have enough to, travel on my private jets. I don't have to think about it too much. My money is allocated in a smart way by a very expensive person sitting in Switzerland. So a good embedded finance, personal financial management service should be able to give you the services that Rihanna receives from her personal banker. So what does this look like? This could look like your salary arriving, and as soon as it arrives, you're bank or app is able to separate those funds into segregated wallets or accounts. Maybe one is generating yield. This is another place where crypto can be really useful. So storing your finances, say if you're in a country with a highly volatile currency, you can hedge by using US dollar or US dollar stable coins, and figuring out ways to embed that kind of activity into the app. Buy now, pay later, I mentioned earlier. No one, my parents' generation knew things as loans. I'm a millennial. We have been told to fear credit and fear debt, but we've packaged it quite nicely, right? So now we've got buy now, pay later, which is still debt, but it's debt at the point of need. It's debt at the point of when I'm making a purchase, and I can spread that purchase out across 3 months. It doesn't look like a loan, doesn't act like a loan, but it actually is a loan. But it's embedded, and it just doesn't feel like it shouldn't feel clunky. So I guess the takeaway for that is what I've seen is embedding finance to a point where for personal financial services, it feels like you have Rihanna's banker in your pocket.
Wow. Bank like Rihanna too.
I would like to have that.
Awesome. So one of the things you asked about as well was challenges. I think one of the biggest challenges in payments and in fintech generally is around trust, right? So I think one of the hallmarks of a successful embedded finance product is that you're leveraging behaviors or leveraging brands or experiences that customers are already using and already have trust in, right? So one of the things I'm excited about that we're also looking at is like payment links. So I think conversational commerce, our use of social media has really increased substantially over the last few years. And so one of the things we're seeing is like even things like booking, an airline flight, for example, can be done through conversational commerce. You open your WhatsApp chatbot, you have a conversation with someone on the support team, and they can send you a payment link, and you can click through that link without sort of leaving that experience and be able to make a payment. That increases the trust. You're already in a flow and an experience that you're sort of used to. We also, I think one of the examples we have is one of our clients is called Gem HR. They're a really cool, innovative HR company based in South Africa. They offer salary advances or wage advances to employed South Africans. And so their entire product is built on top of the WhatsApp platform. So people can message them, they can get documents that they need, they can ask for an earned wage advance. And then with Stitch, they're able to send a payout pretty immediately to those employees that have requested that salary advance through WhatsApp. So we're not, forcing people to download a separate app. We're not forcing them to become accustomed to a brand or a process or a flow that they're not already familiar with. It's something that they kind of use in their day-to-day lives. And then because that payment also happens quite instantly, that trust continues to increase, and they're more comfortable coming back. So to me, that's one of the hallmarks of why we have embedded finance as an offering.
When we first got started, we learned that 90% of Sub-Saharan Africans do not have any kind of insurance, right? This is a huge problem, huge concern for many people. And the base assumption was, okay, maybe it's a demand side problem, right? Maybe people don't want to buy insurance. Maybe they don't have the money to be able to buy insurance. What we found by using embedded finance is there actually isn't a demand side problem. It really is a supply side problem in terms of distributing insurance efficiently to people for mass market consumers. So an example that I'll cite in that is if you're a rural farmer in Uganda last year, you probably had no way to buy an insurance policy that you could afford. Just wasn't an option, right? We launched a partnership with Airtel Money where you can go onto your Airtel Money account, sign up for a month of free insurance with us, and then eventually sign up for a paid insurance product. And now 600,000 rural farmers and shopkeepers in Uganda are buying insurance through Airtel Money that is a Turaco product, right? So this is it's an enabling function for us to be able to distribute to mass scale in a way that just hasn't been possible before.
All right, so we'll stick with you, Ted. I have a question because one of the things we've seen, or one of the things that have actually made embedded finance one of the most prevalent trends, so to speak, when it comes to finance and technology is that customers are demanding more integrated experience, right? So when we look at embedded finance, when we look at the fusion of technology and finance, how are you seeing that transforming the way first consumers access services, and then how consumers or even actually businesses access products?
Yeah, I mean, the example I just gave is a good answer to that. I think it's interesting that you, with a product like insurance, it's all based upon trust, right? You have to trust that the insurer is going to actually pay a claim. And Turaco, at our motto is that we're in the claims paying business, which is a little counterintuitive for most insurance companies, but it's what we do. And the fact that we are trying to be out there distributing insurance, if we were doing it direct to consumer, we might get 1 or 2% of people actually opting in for our product. But because we're selling it through these partnerships, the consumer has so much trust of Airtel Money or of M-Kopa, whom they've bought 3 phones from in the last 2 years, that they're saying, okay, if M-Kopa is telling us that they have this new insurance product, we can trust it, right? So that embedded finance, by working with that company to distribute through them, plugging in through our APIs, being very tech-driven, having a seamless customer experience obviously is necessary in that whole process. But it's really the kind of market solution that I think is the big thing that embedded finance is solving, right? It's actually accessing those customers in a way that you wouldn't be able to access them if you were just on the street selling insurance in like the more traditional model.
If I may build on that for a second, I think that's also a lot what we see as Visa. So of course, we've got the traditional banks that have been offering the traditional models for a number of years. But it's this partnership like Ted that's talking about is the fintechs are coming up with incredible ideas about how to get closer to the consumer and embedding those fintech solutions in large organizations, whether it is the MNOs, the financial institutions, some of the larger insurance companies in terms of banks. So it's that partnership, and I think that's really a big, powerful play, which Visa does, where we look at orchestration. So we'll bring parties together and say, this is how this consumer journey can be brought to fruition. So partnerships is very key.
And Gwera, I think as we're talking about just consumer behaviors, partnerships, what does this mean? What does embedded finance mean? In an African context, let's look at the statistics, right? In regions where there's no access. Mm-hmm. What are the insights based on your experience and based on the work we're doing today? What have you seen as the impact on embedded finance impact on bringing inclusive growth across different regions?
Yeah, so a lot of the work that Onafriq does is enabling embedded finance for non-financial services companies. So we enable seamless integration of payment services to our customers. So if you use Spotify, for example, in Kenya, you're able to access Spotify and pay for your Spotify using M-Pesa, and that's powered by Onafriq. So that, that inclusion piece. What does inclusion mean? I mean, to me, like I said, I'm a millennial. I'm sick of hearing about financial inclusion. I actually would rather hear about financial participation and access to the global economy. So the global economy equals Spotify. And the ability to pay for it using your M-Pesa, using an API that you don't even need to understand that Spotify is using Onafriq, but you're able to access, a global product. But I think let's maybe take a step back and look at the evolution of payments and financial services, and really the evolution of most innovation has happened in 3 phases. So there's analog, what I call analog, digitized, and then digital. So the analog, let's use the media world, right? So the analog was newspapers. My grandparents, my parents read newspapers every day. That's the analog version. Digitized basically just means taking that same analog thing, copying and pasting that into a digital format, and that's digitized. So that's your newspapers on a website. And then digital is when you actually completely surpass that copy-paste piece. So you go from newspapers to newspaper on a website to Twitter or to Facebook, where people get their news. So that's truly digital. That also opens up new avenues for things like citizen journalism, all that stuff. Whereas if you look at payments, for example, fintech and embedded finance, the analog side of it was very clunky, right? You have to go to your bank to do anything, go in our region. Probably non-existent prior to this, maybe using loan sharks. The digitized, we're seeing the Turacos of this world, we're seeing the Stitches of this world, enabling digital financial services to be moving from a bank or a physical location or a clunky experience to be embedded into a product. I would say the next generation iteration of it is digital, and we're not quite there yet, but the digital side, we could dream and think about what does this look like. Thea talked about the Stitches social commerce. that's what I think of as a truly digital form of financial services that fosters inclusion not only for merchants, but for merchants being able to reach their customers. But like now let's think about other use cases, right? So like Turaco enabling someone boarding a matatu to ensure the journey for that day using a micro insurance payment. That's the digital. Embedded finance basically means the digital side of financial services, digital era where it's at the point of need. And then, of course, I'm on this panel, so I'll talk about crypto, right? So cryptocurrencies, stablecoins specifically, embedding that as the next iteration. And I think that is where we truly will find the digital iteration of financial services, because we not only would be able to have the great, like digital innovation that's existed already, but we can couple that with things like programmable money, aka stablecoins, and smart contracts, but also with AI, it's a big scary word, to do really smart things and essentially let you have Rihanna's banker in your pocket.
Okay. Yeah. So we've talked a lot about the consumer end, but one of the other areas where I think we've seen a lot of growth is that businesses are now able to leverage on embedded finance to drive their growth. So what are the practical things that businesses can do, and especially non-traditional businesses, non-finance businesses who are essentially looking to drive growth, they're looking to scale. What are the things that they can do to take advantage of, one, that the consumers are demanding that they build better experiences for them, but that actually embedded finance could be the thing that helps them to the tipping point. So what are the practical things that businesses can do?
Yeah, so from a business-to-business perspective, so Stitch mostly serves enterprise clients in South Africa, and so what we're seeing is there's a lot of demand coming from the consumer side for more choices in terms of different payment methods that are available. And from the business side, this obviously becomes complicated, right? So that means that you have to integrate with multiple different payment providers. You have to make sure that there's redundancy, because if a payment method fails, then that automatically impacts trust, right, on that consumer who may or may not come back to make another payment. And you also have to manage all of those payments and make sure that you're doing the recon on the other side, right? So we actually started offering a orchestration platform for businesses to help them to better manage all of these different payment methods and providers across regions, so that they can make sure that that experience that they're offering to their consumers is consistent, whether we're talking about market to market, platform to platform, omni-channel, right, which is really growing for the e-commerce space particularly. So whether I'm making a payment in person or online, like I expect that experience to be similar, right, and to have the same level of support. I think one of the things we're doing also that's interesting is to enable more consumers to get into the sort of digital payment space, is sort of almost bridging that gap. So we have a product that is cash payments essentially. So you can go to an ATM, you can go to a retail like POS and make a payment in cash through an app, say it's a crypto platform that you're trying to deposit into, or an e-commerce platform, and it automatically gets allocated to your digital account. I think South Africa is a particularly interesting market, because when we talk about financial inclusion, South Africa is a prime example of that, right? Something like 80+% of consumers in South Africa have a bank account. But the reality is that a very large percentage of those consumers will receive money into that bank account and withdraw more than half of it on a monthly basis to be used in day-to-day transactions. And that comes back to that trust piece, right? Because they simply don't trust the digital financial services. Maybe because they've had a bad experience, maybe because they know somebody that's had a bad experience, maybe because they're just not comfortable, they don't have the sort of smartphone access, whatever it is. And so how can we create like these sorts of tools that can enable these people to kind of just start to get comfortable with using digital financial services for the first time? So that's what those sort of cash products are starting to do to bridge that gap. But as a business, you have to be conscious of reaching both those consumers and your consumers that are digital natives, that are much more comfortable using card, et cetera, and make sure that you're accounting for that experience across those markets.
Can I riff on for a sec? So one of my favorite stories that I like to tell is right when we started Turaco, I went to this insurance conference in Kenya, and the theme of the conference was digitization in the insurance industry. And I spent a couple hours like walking around talking to people like, what does this mean? What is digitization? The big theme was, we're going to start using computers now. Like, that's where the industry was. It still is kind of there. So like we are just on the cusp of, like, we're all very cool people, very connected to tech, like believe that this is the future. Most of the financial services industry in Sub-Saharan Africa is still massively analog, and we're just starting the process of actually using embedded finance, using these different tools to get people to actually do the things that they want to be able to do, so that they can transact as easy as they message on WhatsApp.
I've got a question for you. So like I might have been wrong on the spectrum of analog, digitized, digital. Would you say that like Turaco is possibly leapfrogging the digitized and going straight to the digital?
Maybe. I mean, we still have people, right? So it's not all driven by AI and driven by purely embedded finance, right? There's still a process to go through, because when we work with the microfinance bank, right, they don't have any systems that we can plug our APIs into. So we have to work with the reality that's on the ground, and then try and move those consumers as much as possible to being digitized digital consumers.
Just Meagan, before you respond to that, I think I love where this conversation is going, because the reality, again, looking at the reality of, one, we are in Africa, and we don't have to tell everyone the statistics, but we're still largely a cash economy. We're still in that analog digital, and most businesses, if we are frank, traditional businesses, traditional finance, those ecosystems are still pretty analog, right? So one of the biggest, so I love here that your business and Stitch is talking about cash. So thinking about how do you take offline payments into digital, right? But Meagan, just as you're responding to that, I'm curious about what Visa has found out, because one of the biggest thing about embedded finance is that there's barrier to entry, and that is trust, it's access, and it's multiple. The fact that we're cash-based, connectivity. So how do you deal with the fact that embedded finance is great, but there's that barrier?
Absolutely. Yeah, you can't operate in our market with not understanding the challenges. So what I wanted to say is one of the things that Visa constantly faces, and it's all market dependent, is the balance between how many credentials or cards are in the market to how many places can I actually use that card. And we've got markets where a consumer may have 5 or 6 cards in the respective wallet, but the only place you can use that card is at an ATM. And talking about this evolution journey is what we do is we would partner with fintechs to say, okay, if you are able to give a consumer a card, a Visa card, and most of the time the entry point is talking about e-commerce. So especially the millennials, the Gen Zs, they all want to have a Netflix account. They all want to have Facebook, Instagram, etc. accounts. And that generates the credential in their wallet. And it might be virtual most of the time. The next point is, if you've got a consumer with the specific card, then how do you get a fintech to be able to embed their solution? So for example, we've got an e-commerce fintech here in Kenya, which is now going to not just be logistically transporting goods, but they're going to be leveraging the Visa credential and making sure you also integrate through to M-Pesa to make sure that those payments are all ecosystems. So it's a journey. First, making sure, does someone have a smartphone? If they don't have a smartphone, which is most of our continent, then how do you bring the actual acquiring closer to the respective user? And another good example is we've got another fintech that says, okay, we know that wallets are the dominant player in our markets, so I'm not going to push the smartphone penetration, that's going to hold me back. So instead of that, I'm going to make everyone that's transporting goods on their motorcycles have a digital point of sale machine. And that's the entry point. So it's this evolution that we have to go through, and it's about how do you get the cards as well as the point of sale matching, and then bringing all this embedded finance to closure.
Okay, so I'm going to ask this question to you guys. I'm being given time. How many minutes do I have?
11.
11, perfect. We'll cover everything by then. But I'll ask this question to all of you. So in the beginning, we talked a lot about the role of partnerships, and that is across, right? We need more partners with tech, finance. But when it comes to embedded finance, there is a very granular, on a granular level, you need to have like deep collaboration between whether you're analog, but you have to have a lot of collaboration. So my question is to all of you, and you can touch, I think, Gwera, you can talk also about crypto in this sense. what is the role of collaboration, and how do you make the traditional financial services providers, how do you make them comfortable to the fact that there is this new thing that's coming that you actually need to think about digitizing services for your customers, for your businesses? How do you partner with someone who is still analog? How do you do that?
I'm happy to give it a shot. So the first point is really about education. And again, I'm going to just give you an anecdotal story. I was in Lome in Togo a couple of weeks ago, and we were busy doing a street excursion where we were saying, how do we actually bridge the gap to digitalization? And it's not about necessary access, it's about a mindset. And I spoke to this lady who had the store, and she said, no, she doesn't want to engage with digital finance for a number of religious reasons. And when I unpacked it and I said, how does the money flow and the cost of moving money work for her, we worked out that she loses 30% of her cash every month on just moving money, whether it's paying rent, school fees, etc., because she physically transports money. And when we educated her to say, well, if you use a digital version of finance, you can change, she was very much open. So I think the cornerstone is about education, as well as then bridging the gaps in terms of actually deploying the technology.
Thanks. Gwera?
It's a tough one. Partnerships is a fun word, right? We're all here looking for the right kind of partner. We're looking for like the most optimal, commercially viable partner. I think education plays a big, massive role in bridging the gap. But I think what's more important is patience. So like taking your time to, especially when it comes to, a more technologically competent player partnering with an analog player. It takes a lot of patience. Let's look at banks, for example. Banks, a lot of them still do have quite traditional analog processes. The headache is in the procurement process and actually getting through to get the bank on board. So it's difficult for startups to actually go through that. And I think, partnerships between like fintechs, like traditional financial services companies, with each other, but also to work with larger incumbents, it makes sense. So yeah, patience, I guess, is what my final thing.
Yeah, I'll second the comment on education for sure. I think, from our perspective, we actually spun off a separate brand called Wigwag that is specifically designed for SMEs and small businesses that are primarily analog. So your Instagram sellers or your carpenters or your hairdressers, yoga teachers, et cetera, like these people, don't have APIs, they don't have a developer team that they can kind of use to integrate Stitch. And so it again comes back to that almost conversational commerce comment I had before. How can you find the tools that these people are using and are comfortable with to enable them to sort of grow into that digital space? So we provide payment links, for example, for those SMEs. And to do that, we also partner with, again, organizations that they're part of or organizations that they trust, right? So how can we work with, other businesses that have a big community of these types of SMEs that are providing other solutions to them to also help them sort of come into the digital payment space. So that's how we're sort of looking at it.
So our value proposition to a partner is you, Mr., Mrs. Bank CEO or microfinance CEO or telecommunications company CEO, you want to make more money. Your customers want to buy insurance from you. Currently, you don't have any insurance products, so let us do that for you and make it as easy as possible for you to implement this. That said, at our last offsite, the first words that I wrote up on the whiteboard were, partnerships are hard. Because it just legitimately is true, right? Enterprise sales is hard. It takes 6 to 12 months to get a partner to actually want to work with us the right way. When it comes to embedded finance, nothing that we do is a priority for any of the partners that we work with, right? So you have to make sure that that value proposition is very clear, that it's very easy and simple for someone to work with you, and then you have to find someone at the right time. So you have to be willing to get rejected by a lot of people until you find the right bank, and then leverage that bank into a couple more banks and build a book of business that way. But that's definitely the hardest part of, I think, any of our models is getting partners aligned and getting that enterprise sales cycle as smooth as possible.
Okay, we have 5 minutes, but I'm going to beg off a few minutes, but let's talk about regulation just quickly. So we have regulations vary country to countries, region to region. So in your experience, embedded finance, is it enabling? Regulation clarity? Is it inhibiting? What has been your experience there?
I love our regulators. If you're out there. There's lots of different ways to deal with regulators, right? There's front door, side door, back door. Choose the front door. Make sure that you're aligned with the policies of the government that you're working through. Insurance is a heavily regulated industry, and we have to make sure that we're doing things the right way to protect our company, our capital, and the partners that we work with. There's a lot of trust there. So I always encourage other founders that take the front door approach. Don't be lazy on regulation. You will pay the price if you are.
Yeah, and I think it's an interesting time, especially in this sort of open banking space, where like we have the opportunity to sit with regulators and help them understand how to write this regulation for this very new and nascent space, right? So we do that a lot at Stitch. Even PASA, the Payments Association of South Africa, like they had a training course for people that are in fintech that you can complete, right, to better understand how they're thinking about regulation. We work a lot with SARB. Right now, they're in the process of putting together a directive that sort of outlines how businesses should use instant EFT, which is like their version of bank-to-bank payments. We're constantly on top of these things. We have like a growing regulatory and sort of compliance team that works closely with the government on this. So exactly what Ted said. I mean, this is the time when all of these things are being written. So we want to make sure that our voices are also heard in that process, but that we're working closely with those regulators to remain compliant.
I mean, early in my career, I hated regulators. I worked in startups. I worked at a neobank, building a bank from scratch. They just, hindered us at every move. Since then, my career has progressed, and I've been on the other side. Worked for banks, worked with traditional financial services. Regulators have a tough job. It's a tough job, and I have a bit of empathy for that. But the problem, the difficult thing about being on the bleeding edge of innovation and of new technology is education, right? It's explaining the use cases over and over, and sometimes in the place, in terms of crypto, over and over and over and over and over again, and having to have that empathy be communicated. Back to what I said earlier about patience. It takes a lot of patience, right, to engage with regulators. In my capacity, we engage with our regulators. We, with crypto, are going through the front door with our regulators and explaining to them what we want to do in each jurisdiction that we're working in to get their blessing, because we are in a highly regulated environment. Consumer harm, especially in the crypto space, has been all the headlines we've seen. So it's something that I take quite seriously, and I welcome every fintech to do the same. But yeah.
And quick closing comments on that. So in terms of open banking and specifically embedded finance, a lot of the regulations in Sub-Saharan Africa are quite silent specifically on those elements. Obviously, we've got heavy regulations on other elements. And what we also do, quite similar to my colleagues, is we've got government engagement teams that on a monthly basis will sit and educate and say, these are what we're seeing fintechs want to do. These are things that we're seeing how the boundaries are being pushed. So it's constantly that engagement of going backwards and forwards, and then giving the regulator the opportunity to process it and come back to us to say, well, we see these stumbling blocks, these are the opportunities, etc. I think the biggest challenge for the fintechs across the continent is to get that scale. A lot of our markets are so small that you need to operate across multi-markets. And because of the nuances of the regulations, that's often a challenge. So again, regulation always catches up to you. So definitely, I like the saying, go through the front door. But as Visa, also very happy to partner with you in terms of how do we look at breaking the molds and shaping the future.
Okay, so parting short, there is this number that's nice and pretty. We're being told in the next 5 years, is it 39 billion? Embedded finance, Africa, it's about 39 billion opportunity. So it's a very nice, shiny number for anyone who wants to get into embedded finance, but means very little if you actually don't start actually looking forward. So parting shots, what do you see as in the next 5-10 years in the African context, what are the opportunities that you see?
Quick second is social media and Gen Z is high on the agenda. So making sure that we bring all of the social payments, etc., at the forefront of Visa. So Generation X, Generation Z, and social media.
In the next 5 years, I would like to stop hearing the phrase financial inclusion. I'm sick of it. You know, in Kenya, 90% of the population is included, but are they financially healthy? Probably not. So I'd love to see fintechs, digital payments companies, banks working together to actually drive for financial health and financial prosperity, really.
Yeah, awesome. I think that's possible when you have the sort of payments layer that is available, right? So it's also what we always said in Catalyst Fund about Turaco. When you are able to make digital payments, you can build other innovative things on top of that solve for things like financial health. I also think, you know, using kind of new types of payment methods, we just launched Pay with Crypto. Like we might see a lot more people using that sort of those rails to make actual day-to-day payments and like kind of close the gap between things like, you know, crypto and day-to-day transactions.
I want to see the loan sharks go out of business. At least a lot of them. There's always going to be loan sharks, but I think that we should put a lot of them out of business, whether that's better lending products or using insurance products where insurance products are more appropriate, right? 30% of digital loans are used for medical emergencies, right? That should be insured. It shouldn't be, you shouldn't have to take a high interest loan to be able to go to the hospital. So yeah, I want to see those guys have to figure out some other way to steal money from people.
All right. Thanks, guys. That's our time. Thank you so much for joining me. And we're done. Thank you. Thank you, everyone.
Thank you.